Currently, the global cryptocurrency market is in the big red, leaving many retail investors with massive losses. Let's discuss why this is happening and what you should be doing about it. In the past month, the overall crypto market cap has shifted from a peak of roughly $2.5 trillion to currently a $1.5 trillion market cap. That is a staggering $1 trillion loss just in the past month alone. So what does the $1 trillion loss spell for the people in the crypto market? Well, the market comes in cycles. So there is a cycle peak and then a cycle trough. So it appears like in the crypto market overall, the bull run seems to have ended. In the past couple months, the crypto market was booming. It was in a huge bubble. It was unsustainable. And at some point, it was going to burst. And because the market was ramping up with such volatility, and it just kept on going and going, the consequence of the correction is also incredibly dangerous. Let's move aside from the technicalities for a bit and look at what the human psychology is saying with regards to the current prices of the crypto market. So this chart explains the current issue quite well. So I'll go over the very start at the end, because it's sort of a cycle. So at the start, over here, it's typically the smart money, the institutional buyers, the early investors, the early adopters buying the money. And then this section is when people who, upon hearing the news, have a fear of missing out, they also want to buy in. And over here is the distributor high, when everyone thinks it's going to keep on rocketing, everyone thinks it's going to be rich. It dips for a little and it bounces back. This is when people get a little complacent. They think, well, is it going to go up or is it going to go down? If enough people think it's going to go down and they're going to exit out of the positions and it actually goes down, you'll cause a cascading effect because of the fear of the market. So we have anxiety, denial, and lastly panic, where you just panic sell because you can't afford to lose any more money. And that's when we have, according to here, the capitulation and getting 100% out of the market. I can't afford to lose any more, followed by anger and depression and disbelief. And then the cycle begins again. So what we've seen is a lot of people who bought in the crypto market because of the fear of missing out, because of all the hype that's been around it. And recently because Bitcoin wasn't holding up and because of all the negative news, people started to begin to be complacent. And a lot of people got anxious and they started to sell. And the people who started to sell caused a panic effect of other people also panicking and selling their crypto, which is the situation we have today. And now we are in a position where people who are still holding the cryptocurrency still believe that the coin will go up and will not sell, and the cycle begins again. And if we look at this article that compares the Bitcoin crash of 2021 compared to the past sell-offs, we can see over here on this particular chart where the peak of the Bitcoin price was $64,000 before it plummeted to $31,000. As we can see here, this wasn't even the biggest event that's happened. So in 2013 to 2016, the price of Bitcoin went from $1,100 to $152, and that was because China banned Bitcoin and the Bitcoin exchange suffered a hack. There were regulatory troubles and eventually a bankruptcy. We have almost a very similar issue here. What sparked the event was Elon Musk's tweets that Tesla will stop accepting Bitcoins and subsequently China's ban on Bitcoin and crackdown on Bitcoin mining. So now that knowing that market moves in cycles, where are we currently at in the bull-bear market? One way to gauge this is we can use reputable media articles to see the sentiment and build a better understanding of where the crypto market currently sits. So for example, we have a few articles, there's thousands of these around. You can sort of build a catalog and have a sense of how people who are writing the articles are feeling about where we're currently at. But in this one, for example, crypto price alert, JP Morgan, issue stock Bitcoin warning as Ethereum, Binance, BNB, Cardano, and Dogecoin slide. So in quote here, we believe that the return to backwardation in recent weeks has been a negative signal pointing to a bear market. JP Morgan strategist led by Nicholas wrote in a note that was first reported by Financial News Bloomberg. In a different article, Bitcoin's bull run may be over for now, but it's not over. A negative news out of China and Elon Musk's Twitter feed has hammered cryptos, but the bull market is not yet over. Bitcoin crashes as investors fear crypto bull market could be nearing its end. It seems like a lot of the articles are pointing to the fact that the bull market has run its course and we are nearing the end of the bull market, and that's no surprise because given how much crypto has dropped in the last month alone. But I want you guys to have a think about why Bitcoin rallied in the first place. Well, initially Bitcoin was just an internet cryptocurrency, and it took off because it was a decentralized currency and moving away from the traditional money that the banks have used for hundreds of years. Now, over the last half a decade, there's been a lot of infrastructure that has been built on Bitcoin, and skeptics for the last decade have always thought that Bitcoin's never going to take off, but it stuck around, and if anything, it is the fastest growing currency in the world. Now, when infrastructure is made, it's made by people with a lot of money, and people with a lot of money have a lot of investments in this particular infrastructure because they want to make more money in return. Now, think about it this way. If the government wants to put hundreds of thousands of dollars on building roads, they believe that building faster roads would mean better traffic, which leads to better commute, which leads to more money as a result of better human productivity, which leads to a net gain of increased income, and as such yielding more taxes to be deducted from its commuters, from its workers, from its employees. Bitcoin functions the same. There is a lot of infrastructure that has been built for Bitcoin because of its speculation that it will be used as a future currency, and this is very evident. So in the last 5 years, we've used Bitcoin as a way in the black market to sell illegal goods, to now you're able to give and receive donations via Bitcoin. You can gift cards, you can buy video games. Companies like Microsoft have offering games to be purchased via Bitcoin. You can now buy food, you can now travel. There's a whole different things that you can now use Bitcoin for. And the adoption for Bitcoin is ever so increasing. With so much infrastructure in place, it's increasingly more difficult to just topple over a coin and make it absolutely useless because there is just so much support and there's so much use already for the coin. It's just not going to vanish overnight. This is obviously very different to meme coins, which don't have any inherent uses because the value of its coin simply sits within the perception and the speculation of the coin holder. This interpretation is obviously a very broad overall view of the use of Bitcoin and cryptocurrency as a whole. But I just want to reassure that because Bitcoin and other cryptocurrencies have been integrated into infrastructure from a technical and technological point of view, that it can't just vanish overnight. And it's actually quite the opposite. Because of the significant news that's been happening in the last year or two, there has just been so much more support for cryptocurrency, and as a result, there's been a push for technology to integrate Bitcoin and cryptocurrency as a whole in future developments. As a way of example, in recent years, we've seen the rise of NFTs, and also believe it was this year when Elon Musk released one of his tweets as a NFT that is available for purchase. There is a lot going on now, more so than ever before, in the way of cryptocurrency. And all of this, as well as all the good things that are happening to the crypto space, will be reflected in the price of crypto. While it might not be the case currently because of all the immediate psychological feelings that people are experiencing due to the market prices, such as fear and panic, and once those feelings subside and stabilize, we will see cryptocurrency revert back to the track that it was on. So let's go through some of the things you can do as a trader with regards to your current position. So option 1, you can what we call paper hands. You can exit your position and use the liquidity for alternative investments such as index funds or something completely removed from the crypto financial markets. The benefit of this is that you can put your money to work in other areas and you won't be tied up in the negative return investment. The flaw of that is you need to take the loss that you've currently experienced and won't be subjected to any sudden increase in price that could potentially happen for any number of reasons in the crypto space. Option 2 is called diamond hands. The mentality of this is things look grim right now, but they won't be forever. The crypto market historically has never been through a bear market that it hasn't recovered from. If you truly believe that crypto is the future of currency, quoting Elon, then you may be inclined to weather the storm and hold out. The benefit of this is that there is no action required. because you're already in the position to be exposed to the future bull market should they eventuate. The flaw of this is that you're literally holding a losing investment until then, and we don't know how long that's going to be, and that may be days, weeks, months, or even years, and you may be losing out on potential gains from other markets. And the last one, while it's not the recommended approach, but it is approach nonetheless, is doubling down. So average down your positions as the market moves lower. What this means is that you lower your average entry price and you position yourself optimally for future bull runs. So the flaw of this is that this requires additional capital investments over time, depending on your averaging down strategy, and you're likely to be in drawdown for a good while. And as for me, I have taken a combination of option 1 and option 2. I am not a risky trader. When the price of the coin I'm trading falls below the support, I head out. I take my loss and I head out. And I still have a sizable amount in coins that I believe in coins that have a sizable infrastructure built around it. And as a trader who is very risk averse, I will typically not move my funds back into crypto until I see a clear bounce of the new support level for the coin and the prices begin to surge back up as new traders step in. I'll be amongst one of the people who will step in upon the price bounce. To show you guys what this looks like, I've also shown this in the past videos. So when we see the price move down and we see exhaustion and we see a support level being formed and I see the stochastic turning upwards, I would typically put a position once I see and confirm that the price is moving up, and then I would increase my position as I have more confirmation. One thing that I see people do and talk about, and it's a bit of a pet peeve of mine, is that people always talk about catching the low. A lot of the time this doesn't work out. What ends up happening in my personal experience throughout my trading is that when you try to catch the low, you'll most likely end up catching the knife. What you want to do instead is riding the rocket. So once we see that the price has bounced, as opposed to trying to catch when the price is hitting the low, you ride its rocket on the way up. And last but not least, I want to remind people that investing and trading in crypto, there is a far increased volatility compared to other investment products because you must have an understanding of the risks involved. I am a firm believer in crypto, and that is my opinion and my opinion only. Right now, it will take quite a big catalyst to shake up the crypto market in the direction of the bulls, but I think that has a higher probability of happening than the situation worsening. We are already seeing some positive news happening out from El Salvador and India in terms of making Bitcoin an asset class, and I believe other countries would also likely follow suit. And I believe that has a higher probability of the prices recovering and going back up in the direction of the bulls, in favor of the bulls, than it is in the direction of the bears. We will have to wait and see, and when something does happen, make sure you subscribe to get informed straight away from our YouTube channel. That'll be mostly appreciated. Thank you. All the best.